Hi, guys. My name is Rudo, and as you know, this is the Trade for the Living podcast. Today, we need to talk about the entire crypto market slowing down and the worries that I have around Bitcoin falling all the way down to at least $71,000. Now, at the moment, we've got a long going on. And if you have a look at that, hello, Peter. That's what I warned you about.
Hi.
So we're busy setting up the behind the scenes scene stuff between me and him. So, in any case, we're looking at at least he wasn't picking his nose. um, so behind the scene, so to the point, we're looking at Bitcoin, and we've got a long going on at the moment, and we need to look at this long, and we need to define whether we need to be remaining, whether we need to hold it. We need to draw a line in the sand where if it goes below, we need to take profit. And then the other side of this is we need to protect ourselves for what if the market sells down. This afternoon's HODL stream, I'm going to be sharing a few things that might shake your bones a little bit. And yeah, it's worth noting that. Now, the previous short that we did, that I shared with you guys, did stop out. But it doesn't mean, the concern that I had with that short was exactly just that. The market is going to chop around, and if it takes us out, there's this imbalance sitting right above where our stops would be. And subsequently, the market's been chopping around. Now, on my trading side, my trade panel, I'm in a sell zone and in a short from last night. And we're basically in a situation where we're adding. So for today, I'm going to deviate slightly from this chart and take you through a weekly, daily, 4-hour analysis leading into a reasoning or rationale behind the 15-minute. And then I'm going to simplify things again, especially for you that are maybe new to trading or still trying to find your feet, so that you can basically take this information and set yourself up for the Easter weekend. Okay. There won't be any streams tomorrow, and there won't be any streams on Monday. But if something crazy happens during this weekend, I will be doing a stream just to make sure that everybody's on the same page. Okay, there you have it, guys. So if you're new to the channel, hit the like, hit the subscribe. OGs, say hi, and let's get into this. Okay, so I'm going to switch over to this chart, and I'm going to start with the weekly time frame with you for you guys. And let's quickly have a look at this weekly. Now, the problem that I have with the weekly is, this is the only problem that I have with the weekly. We currently have hidden bullish divergence on the weekly, which means if I zoom out, and let's take away that text because it's just blocking everything. If I zoom out, from looking at it from this point of view over the last 2, 4, or 5 years, basically, Bitcoin's just been going up. This is a correction on the biggest scheme of things. So weekly is bullish. That's it. And if the trend has always been bullish for Bitcoin up till now, meaning from cycle lows to cycle highs, it's never really made a lower low. Bitcoin hasn't gone and taken out previous bear market lows ever. It's never done that before. The argument then is that it's still trending bullish. And if something's trending bullish, we need to treat it like this. When we look at the divergence, we're looking for continuation, which means that if there's a retrace on a specific time frame, like we have now on the weekly, and price does not put in a lower low, but the RSI does do that, it means that there's a hidden bullish divergence. This is the strongest divergence around. And if ever you want to doubt something, whether the narrative is whether it's going to be bullish or bearish, I will always bet hidden bullish divergence over any other reversal signal that's there. Because as a trader, the rule is you treat the trend as if it's going to last forever. And only when the trend breaks, that's when you start looking at these things. You can use these other divergences to maybe take profit and look, because there will be a reaction, but it won't necessarily break a trend. It just shows you that the wave is maybe exhausted. So back to the weekly time frame here, this means that this strong bearish divergence that is clearly evident on or visible on the weekly time frame is not to be seen as a bearish signal. It's purely a signal where the market is trying to find a little bit of common ground again before it can move on. And normally I'll only start worrying about it, saying that the bullish trend is broken once we fall below that initial pivot. So it's very simple to identify it on the RSI, the highest point, and where the divergence is of price. That would be the support area. So in order for us to remain bullish, that is the support, $68,000, $69,000, give or take a few cents. So even if during the Easter weekend, maybe something happens and Bitcoin falls, it wicks through, wait for closing prices. If the weekly closes below that, I'm worried. But until then, any dip is a buy the dip opportunity, especially where the alts is at this moment. Now, to get back to the continuation, the hidden bullish divergence as per the image. So I've moved them around. Now I always have to go look again where it is. What we want to see is the RSI falling below. And this is where I'm maybe a little hesitant on the weekly time frame. Because what we have at the moment is hidden bullish divergence by all accounts. There's the RSI, there's the lower low on the RSI. So let's mark it out as hidden bullish divergence. And if we then look at price, I'll make my screen a little bit bigger and do this, simplify it. Just look at price. What do we have? We've got a higher low. So you have a divergence in the market. The market is doing the opposite of what the sentiment is. People are bearish. A lot of KOLs and influencers are bullish, but the general sentiment is bearish, but price is not supporting that because it's not making a lower low yet. Okay, that's it. So from a weekly point of view, and I think just to set the sentiment for you, I'm hopeful that the market is going to remain bullish. But understand that 71K is not off the table yet. So if that happens, it doesn't change my bias. It just means that I have been planning for that, and I'm ready to execute a trade on that should that occur. Make sense? Over to the comments. Let's quickly have a look at what we've got here. Only 4 comments. Come on, guys. Say hi to me. I mean, I'm talking to you. You need to talk back to me. Let's quickly see where we guys are at. So, morning to the Mars. Hope you had an awesome day and you've got some fun stuff planned for this Easter weekend. Altec Codes, happy to have you here as well. And Ivan, good morning to you, my friend. And anything but a crab market. Well, Lumpy, I'm calling this a kangaroo market because if we're leaving over or heading over to the daily time frame, it's literally going to be bouncing up and down. That's my personal opinion. So let's see. Hello, Mr. What is this? Skydemix. Cool name. Adolfo. Good to see you here. And there we go. So the comments are starting getting in. So if you're excited about the Easter weekend, or if you're even better, let's scratch that. If you're okay for Bitcoin going to 71K, give me a 777 in the chat. Let's quickly see who's okay if Bitcoin goes to 71. Let's move on to the daily time frame. This is the part where I'm concerned about. This is the part that kind of bothers me. So same way now. Now we're looking at just this retrace. So from the weekly point of view, I'm now saying, okay, I understand big picture. All of this is bullish. But now I want to dissect what's happening in here. Because if I want to use this bullish bias, I need to hunt for a buy zone and I need to understand, when the trend turns. Because from a leverage trader point of view, it is exceptionally or extremely impossible or hard, let's put it like that, to just open a long here and say, it will be okay. You need to have an invalidation. So when we go to the daily time frame, I'm looking at that retrace. I'm not looking at the bigger picture anymore. And here the sentiment then changes. So for me, the daily time frame is a lateral range. Why? Because we were trending bearish or correcting, and now we've had strong bullish divergence to kind of try and slow down the market, which means the RSI went in the opposite direction. But it doesn't guarantee, because what happens is when we try to reclaim that initial pivot to go and make a higher high there, because things that go up makes higher highs. So simple as that. To try and get that higher high, we failed. The market failed miserably, fell and made a lower low, which means the higher high target from 95 is moved down to 88. Okay. And when we went down, went lower, we made yet again another strong bullish divergence. But have we made a higher high? Have we established a bullish trend yet? Is there anything to say that this is bullish long term? No. We're on our way to try and see if we can make a higher high. Just like that wasn't a bullish trend, this isn't a bullish trend. And typically a trend looks like this. Big blue candles, no lower lows. So your daily overlaps do not overlap the previous day's low. Simple. As long as that happens, and you can almost track that. You can have a look at that. There's a low, there's a higher low, higher low, higher low, higher low, higher low. There we had one day where we made a lower low. And then we went higher low again. So it's actually simple being in a bullish position or holding something for a long-term swing. Because once we start overlapping, that's when you start becoming lateral range, because that is the sign that the momentum is gone, which is the reason why I'm saying from where we're at now, the hope was that we were going to be bullish, but the momentum is gone. We're back into this lateral range, bouncing range. And if the momentum is gone, the market's going to go to the last time it had buyers, and it was when something gets cheaper. That's the worry that I have. So if we don't get that higher high during this Easter weekend, or pretty soon, I mean, there's no deadline on it. We just don't want to see this. You know, we want to have that higher high in place, because then I can buy the dip with a lot more confidence. Because now at this stage, if we don't get the high high, any dips, I would rather short them and not try and long them for that reason. Okay. So the daily time frame, in conclusion, just to kind of solve it out for you guys, lay it out. It's a lateral range. We're failing to make higher highs. We rejected at a supply, and there's one level that I just want to give to you guys, and it's the critical level, and it's 82,900 or 83. If we're going to try and build a base, let's say the momentum, which is clearly gone, doesn't necessarily mean the trend wants to reverse back on itself. It means that we cannot lose that level. So if we grind sideways like this for the whole Easter weekend, and say come Tuesday or Monday morning, we have our breakout there, that's okay. But if we start falling below that 83, it means that all of this gains, all of this divergence that basically led to the little bullish push that we had, is just the market bouncing off another support level on its way to look for another lower support level. That's all that means. So it's a hard time to be in the market at this moment, because we're literally on the 50-50 line. And that's why it's lateral. It can go up, it can go down. That's it. There's nothing more that you can say or to be said around that area. Now, before I head over to the 4-hour time frame, just quickly want to remind you guys about our channel sponsor. Today's video is brought to you by Blofin. If you open your Blofin account, guys, you can actually come and trade with me in my Discord. And there's, for a limited time, I think there's only a few seats left, the opportunity to actually join my private trade community. That community is normally only available for those willing to put out $1,000 to enter the community. So you can quickly see what we're doing in there. There's HODL reports, investment reports, and everything else there to kind of help build a beautiful portfolio for the next bull run. So take advantage of Blofin. It's only going to be for a little while longer, and that's it. And if you use the special link, there's a link that I'll be dropping after this video in the comment section, that will give you an opportunity to actually win prizes for every $10,000 worth of trading volume. So Blofin will be putting money back, those commissions that you pay, back into your account, plus additional winnings, should you be so lucky. So why not? Okay. So let's head over to the 4-hour time frame, and let's take this now in, and let's see where we're at. Now, remember, now I said the weekly is bullish. This means I'm hoping for a breakout on the 4-hour. Okay. The daily is lateral range, which means I don't know whether it's going to happen now or potentially later on. And this then means for the swing trader in me, remember now, I need to act on this and take a position and be able to sit with that position for 2 weeks. The swing trader in me is confused as hell. because these two time frames don't correspond. This makes it hard, which means, in short, the kind of trading environment you're going to be substituted to at this moment is going to be a choppy environment. Technical analysis will work less frequently now. So you can basically almost say it in the simplest term, you're going to be going on a losing run potentially, because you're going to draw out your setup. Everything's going to line up exactly picture perfect, and then it's going to fall through it. And it's going to make you question whether what you're doing is right. Don't do that. It's just the nature of the kind of market we're in at the moment. Your setups aren't broken. Your luck isn't bad. It's just the nature. So you need to understand and trade according to that. So which means when you enter and it does give you profit, take the profit rather, because later on, say we do break out and we do get that higher high level, it will come back and test these lows again, just to make sure. The market is extremely kind in that way. It will always give you a second chance, just not at the price you want. That's typically the way it works. So for the 4 hour, that makes it really hard for me. Now, the other way, or the other argument that I can put to myself to say, okay, right, if I really want to now get that swing position on the 4 hour, what should my bias be? And that would be that of a short. Because for the 4 hour, the nature of the data, because we've now zoomed in, we've got more information than the daily and the weekly, we're still trending bearish. And a 5-wave correction is normally the end of any move, meaning if you've got this is a little bit of Elliott wave, just to simplify it, Elliott wave for you guys. Any trend will be in a 5-wave structure, typically. And that means that any correction will be a 3-wave structure, A, B, C. But now you know that there's waves within waves. So every time we zoom in on a wave like this, you'll have your 5 waves within that wave, which means, like I said, just now, there's always that second chance. So even if you miss the bus there's more opportunities coming. But then the same is true for correction. So there will be an ABC in there and an ABC in there. But here's where the market deviates slightly. Your last wave is typically a 5 wave. 1, 2, 3, 4, 5. So that last leg, that A, B, C, this is normally a 5-wave structure to just conclude the exhaustion of the bearish trend, or the retrace. And in this area, you will have a scenario where there's a lot of strong bullish divergences that doesn't make a higher high, it fails. Strong bullish divergence doesn't make a higher high and fail until you have your final strong bullish divergence that indeed does go and make the higher high. And then we're back onto the bullish side. So to take that information to where we're at here, we could potentially now go and make that higher high, then come back and buy. So that's the swing short. Or the argument would be that the 5th wave isn't done, meaning that this is part of the correction. A, B, C, 3 waves, B, 1, 2, 3 truncated 5th, 1, 2, 3, 4, and then we still need that 5th wave down so that we get that XW or XYZ. Now remember, guys, I am not an Elliott wave trading expert. I just understand enough about this to know that there's always that possibility of a count pointing to a lower low. And it doesn't necessarily negate any trend or bias analysis. It's the same if we were to have looked at this from a Wyckoff point of view. One can argue that this is the end of the trend, this is the test, this is the shakeout, and this is now the momentum, the continuation of the trend. Now, I did a Wyckoff markup like that just a few hours ago for everybody in the Discord, or yesterday, to just say that, yes, there is that potential that this is your accumulation. Let's bring up this chart. This is a last point of supply. Let's see if I've got one here that's got a lower low in there. Maybe I'll be so lucky. There, reaccumulation where that phase C falls through. But I don't think I'm so lucky on having that. It's the inverse of this, something like that. So we could have that scenario where this is just the beginning of that. But then yet again, we have the problem. There's a lot of highs that need to get broken before we can even say that this played out as an accumulation. We've established a trend and ready to go, which means the swing along still doesn't pan out for me. The best opportunity for me as a trader is still to swing short. Okay, does this make sense? Is this too complicated for you? It's not an issue. Let me know in the comments. We can simplify this now for you to try and get you through the Easter weekend. I'm going to head over to the comments real quick and just quickly see what you guys are on. Ricardo, nice to have you here, my friend. Let's quickly see. Faster than slow, Mr. 777. Nice to have you here, Walter. I think we're in the sort of bear market. Well, the start of a bear market. Walter, you know, this is this complacency. Why I want to disagree with you, and you know, bear with me in this regard, is that when we look at the emotional market cycle of things, to try and just put myself in the mindset of how I was and everybody was in the previous bull cycle and the previous bull cycle before. I've been through this ringer now a couple of times. Is if we're in a complacency phase, everybody still believes that's there. And once we start moving in anxiety, people still have hope. They still have denial. They still have panic, you know, all those emotions, but they still, maybe it will come back. Maybe it will come back. And when we're looking at capitulation, that's when people saying it's over. Okay? We're in a bear market. It's done. And as you know, everybody that gets it wrong, they buy the top and they sell the bottom. So I'm not saying that you're wrong, and I'm not saying that your emotion, your feeling is not, valid. And I'm not saying that you're not skilled enough in any sense to maybe read this like complacency at the top and the market's going to go down. But until we lose critical support levels, and I took a lot of flack for this when we looked at Bitcoin, you know, back in the day, you know, large picture. You know, let me just show you something, you know, because my argument was that none of this retrace could be classified as bear market until we lose critical hidden bullish divergence, which is what we did. And the problem, though, is that at that stage, Bitcoin has a little dip in the scale of dips, but the alts still went down another 99%. So are we here? And do we know that this is going to happen? Or are we here ready for another leg to the upside? That's one thing I think none of us, neither me or you, can really truly answer with high 100% conviction. So to say that we're in a bear market, I would rather say yes, the alts were, because the dominance has wrecked them completely. And I'm looking for Bitcoin to kind of give me that daily, weekly kind of bounce scenario, because that means then that from a bear market point of view, you're then 100% correct. And this shakeout, maybe Bitcoin going to 71, let's say worst case scenario now, would put the alts in a depression. And this is bullshit. That kind of people will just leave market. And then is that a bear market, or is that where you want to buy? Because a bear market means that it's going to remain bearish and it's going to keep dumping for 6 more months, maybe even another year. Or is this the area where I would rather sell? This is the time where I would rather risk money, because it might just be that bus is now empty enough for the coins to move. Okay, that's it. So I hope that makes sense. Now, let's simplify things. I'm going to just quickly go to the comments one more time. Let's quickly see if there's anything else that I see that's jumping out. Yuto, nice to have you here, my friend. Do we still have a last leg up? Alts needed. Okay. Okay, let's talk the hopium in a simplest way, and then we'll take that. We'll take that. Okay, so I'm going to go back to the 4-hour time frame. Remember, this is not necessarily a HODL stream. This is more trade-related stream. I kind of opened the door with giving you guys a multi-time frame analysis here. But even if this is bear market, what will happen is, and remember, alts is something you own on spot. You don't necessarily, you're not leveraged. If you talk about an alt and you've got a leveraged position on it, that's a trade. This is not for you. Let's say we do lose critical areas of support. It might be 6 months, it might be a year, but at some stage, the market will come and see whether 90 is truly resistance. And it might not be at the time that you wanted. You want it to happen tomorrow or next week so that you can get out. It might be 3 years or 2 years from now. You know, for the same reason that if I scale this back to the weekly time frame, you look at this structure and you say, okay, what happened there? We lost critical areas of support. It took the market from May 2022 all the way to April 2023 to go back to that area. And whether the market then wanted to be bear market and start trending down lower or not, there will be a reaction at that range. Now, this level is for where we are now, this level. And it could be that, let's say I'm wrong and 71 is lost, we go below 59, we delete it in bullish divergence, and we do go into what is a real bear market, which means where the alts are now, they're going to make lower lows. They're going to get so wrecked, it's funny. In the future, price will come and revisit this range just to make sure. The alts probably won't be at the same price as they are now. So you are going to walk away with more drawdown than what you have. But that is still always there. That's the scale of time and being patient. The market will go and revisit and fill gaps. We just don't know how long the journey is. Okay, that's it. Hope that answers your question and gives you a little bit of an insight of, the time frames. Let's finish off with this analysis and simplified version of what I just said on the 4-hour time frame. So my biggest concern on the short swing at the moment is that we're in the imbalance area. We do have hidden bullish divergence. So the strategy that I want to show you guys, I call it my Strat 5 strategy. So if you use the buddy indicator, you'll find that, and this is something that you get when you open your Blofin account using my partner link, you get access to the buddy indicator. You'll find that it's got these strategies built into it, which is basically my trade strategies, and it functions as a helping tool. It kind of tells you what you need to be looking for at the right time. So it will pop up Strat 5, consider this, we want to continue, those kind of things. And where we're at now, the market is light blue. So a Strat 5 in this instance will appear when the market is there with a continuation of a trend. So that's that dip that I'm thinking of. Okay, and if it falls lower, there won't be any Strat 5. There won't be any of this. But from the bearish point of view, the Strat 5 would look something like this. Gives you the short, tells you when to enter between the lines, and gives you the TPs. And that still needs to occur. And the way that will occur is simple. It is scanning the market and it's saying to myself, okay, if there's a high on the pivot, there's a lower high, and there's a higher high on price, there's your strong bearish divergence, your Strat 1. So if I switch on, Strat 1 should appear. Come on, load. Yeah, it's there. Let's switch on everything. Let's see. It didn't pick up that as a Strat 1. That's weird. Okay, but that's besides the point. That is where I would hunt for a Strat 1. The Strat 5 would say, if we fall below and we make a lower low, which we almost did, once price moves in there, that would be the continuation for the move. And that would be the area. So between this pivot and that pivot would be the area where price would want to try and shake people out and then fall for lower. It's that setup there. There was the divergence. Okay, well, it's not as picture perfect. And then the market goes there again. And that's a Strat 5. Shakes everybody out and then goes. And that's why, if I take away all the brush strokes, I gave you guys that short when we look at all the setups that I shared with you guys. That's why we got that. And the market took us out completely, and then we re-entered there, and we were in the short all the way back down. Okay, so that's the Strat 5. So as for the reason why there's no red things there, I'll go and check what's wrong with the buddy code, because it's supposed to be giving you strat ones. There's a strat one. There's more strat ones. So I don't know. Maybe the market is just a little bit iffy, and the indicator can just use maths. So I'll go and check and see that for you guys. It works beautifully on smaller time frames as well. Just to give you guys an idea, on a 15-minute, if you start zooming in, let's zoom into where we are now, 15-minute time frame. So it starts giving you hidden bullish divergence moves. And this one didn't fill because the market was too manipulated. It got there too quick. And the same with this one, didn't fill too quick. Maybe if you entered, there's your TP1 already. Stop at break even. So it tries and gets you in the right move, in with the right momentum. So even though you're new to trading, you might still try and figure out what to do. It will help you, and it has about a 65% accuracy, which means in this instance that short failed. It said there would be the continuation. We got above it, which meant that that's a good sign that it failed, because now we're bullish for a while. Okay, so let's see how the market plays out. 15, 10, and even 8 minutes are really good time frames to use the buddy indicator to look for your entries. That's what I use it for personally. Okay, we're about 31 minutes in. Let's quickly go to the comments and see where we are. Hello, Matty. Hello, Bronwyn. I think that's basically everything for today. Guys, I'm going to end off the stream, and I'm going to leave you with the following. Let's go back to the 4-hour and just switch off the buddy indicator there so we can have a look at this. And where's all my TA gone to? This is weird. Click on the right one, then they will reappear. Okay, there we go. So in essence is, for the sake of protecting your long, I would consider using this as my next bearish setup for the Easter weekend. And then the invalidation would be, if we were to go make a lower low, let's say we fall below that 82,960, that would be the area where I would then consider, let's take away this, let's just, I would consider taking profit on this long, because then it's a 1-to-1 risk to reward ratio. There's still a decent amount of profit, but if it does, we're going to go visit these ranges at minimum or go make a lower low, and that's why the short has got you covered. There you have it, guys. Thanks so much for taking the time. I'll be back once more today when we're going to be looking at tariffs, the bigger picture of the Dixie, how the US economy is influencing the general sentiment and everything around that, and how that's going to impact our alts and cryptos, so that we can have a better understanding of what could potentially still drive bearish and bullish mechanics for the next 2 weeks or so. Okay, so looking forward to seeing you then. You have a lovely day, and as always, hit the like, hit the subscribe, and keep hustling, my friends. Cheers.